the cornerstone of a nation's monetary system, tasked with formulating monetary policy and regulating member banks. Unlike market-based institutions, central banks hold privileged control over the production and distribution of money and credit. This unique position allows them to influence interest rate, stabilize the economy, and maintain currency value. While some central banks are fully nationalized, others operate independently of direct government control. However, their authority and privilege are protected by enforced by law, ensuring they remain key players in the financial system. Ultimately, central banks play a vital role in balancing economic stability, but their independence and power often make them a subject of debate. The importance of Bank Negara Malaysia. Bank Negara Malaysia play a vital role in ensuring Malaysia's economy and financial stability. First, it maintains monetary and banking stability by ensuring inflation is controlled and the banking system remains sound. Through monetary policy, BNM uses tools like the interest rate to balance economic growth and price stability. It also ensures financial system stability by managing risk and protecting the economy from potential crises. BNM fosters the development of financial market by creating an environment for investment, innovation and growth. As the authority responsible for issuing the national currency, it also ensures the ringgit security and credibility. As the government advisor, Bank Negara Malaysia also provide experts like financial recommendation to guide policies and decisions. It also develop a reliable payment system infrastructure, enabling seamless and efficient transaction nationwide. Lastly, BNM promote financial inclusion by ensuring everyone, including underserved community, has to access the financial service. This function make Bank Negara Malaysia a cornerstone of Malaysia's economic success.
Mission of BNM Bank Negara Malaysia, as the central bank, is committed to excellence in promoting monetary and financial system stability and fostering a sound and progressive financial sector to achieve sustainable economic growth for the benefit of the nation. Next, the objective of BNM. First, price stability. Price stability is to ensure that inflation is still within a controlled range to support the purchasing power of the currency. The second is economic organization. By promoting sustainable economic institutions by providing a stable macroeconomic environment. Third, financial system stability. Watching the banking, insurance, and payment system sectors to ensure they function efficiently and resiliently. Next, financial market development supporting market growth, bonds and domestic capital to provide various financing options for businesses. Finally, sustainable financial infrastructure investing green financing initiatives to support environmentally friendly.
So now I'll be presenting the structure of Bank Negara Malaysia, which consists of two parts. The first part is the governance that includes governor and board of directors. The second part includes the board of committees and departments. As we can see here, this is the structure of Bank Negara Malaysia. Now, I'll explain the governance structure of the bank. First, we have the governor. The governor is like the CEO of the bank. They lead the bank, make big decisions, and ensure the bank achieves its goals. Some key functions of the governor include overseeing the bank's overall strategy, representing the bank locally and internationally, and making sure policies align with the nation's financial objectives. Next is the board of directors. This group includes experts from the government and private sectors. They supervise the governor's actions and make sure the bank runs correctly and ethically. The board's main roles are approving important policies like the budget, monitoring the governor's performance, and managing risks while ensuring ethical practices. Let me quickly explain the three main committees of the board. First, the Board Governance Committee makes sure the bank has good governance practices. They review the budget, policies, and recommend people for other committees. Second, the Board Audit Committee checks the bank's financial accounts and internal controls to make sure everything follows the rules and is accurate. Finally, the Board Risk Committee looks after the bank's risks, like financial issues, operations, and cybersecurity, to keep everything safe and well managed. together, these committees help the bank stay organized, secure, and accountable.
Let's hop on to the 7 key areas managed by the departments of Bank Negara Malaysia. First is monetary policy, which focuses on keeping prices stable to protect the value of the currency, the ringgit. Second is financial system stability, which means ensuring the financial system, like banks, stays strong and secure. And third is financial sector development, which works on building financial tools and organizations like stock markets and credit services to support the economy. The fourth, payment system development, focuses on building and maintaining secure and reliable systems to make payments easier and safer. Next, financial inclusion works to expand access to financial services so that everyone from all areas of society can benefit. The Government Banking and Advisory Services Department acts as a banker and provides advice to the government on financial matters. Finally, currency and reserve management is responsible for issuing and managing the country's currency to ensure its stability. Together, these departments play a critical role in maintaining a smooth, efficient financial system.
I'm going to talk about the function of a central bank. Therefore, first, ensuring monetary stability, Bank Negara Malaysia adjusts the OKR to control inflation and deflation, keeping the economy balanced. When prices stay steady, it gives us investor confidence and keeps our economy strong even during global uncertainty. Secondly, currency issuance and management. BNM handles the printing and issuing of money, which we get through ATM or banks. They also update our banknotes regularly to prevent counterfeiting and keep the designs fresh. Thirdly, foreign exchange management. BNM use foreign reserve like US dollar to stabilize the ringgit when its value drops. Malaysia's approach during the 1997 crisis, which fixed exchange rates and capital control, is a good example of this. Finally, promoting financial stability, BNM runs stress tests to make sure banks can handle tough times. With expert advice, the FSC keeps our financial system strong and ready for challenges.
Monetary policy is an economic strategy implemented by a country's central bank, such as Bank Negara Malaysia or the Federal Reserve, to control the money supply, manage inflation, and promote economic growth. It uses tools like adjusting interest rates, influence borrowing and spending, and changing reserve requirements to regulate the money supply. There are 2 types of monetary policy. It's expansionary, which lowers interest rates to stimulate economic activity during slowdown, and contractionary, which raises interest rate to control inflation in an overheating economy. Overall, monetary policy plays a crucial role in achieving economic stability and sustainable growth. Price stability is a key goal of monetary policy. It helps people and businesses plan their spending and investment. Stable price also prevent the negative effect of inflation, which can harm the economy. Inflation reduces the purchasing power of consumers, especially low-income households, and rise businesses' costs, leading to higher prices. Deflation is also harmful because it causes people to delay spending, which slows down the economy. The central bank controls inflation by adjusting interest rate and managing the money supply. When inflation is high, it raises interest rate to reduce spending. When there is deflation, it lowers interest rate to encourage spending. In Malaysia, the BNM aims to keep inflation around 2% to maintain a stable economy. Economic growth focuses on increasing the production of goods and services to improve the economy. The central bank helps create conditions for long-term growth to rise living standard. The central bank controls economic growth by managing credit and interest rate. By changing interest rate, the central bank can affect loan spending and investment. The central bank also tracks economic growth using gross domestic product (GDP), which look at businesses, activities, investment, and jobs. Through monetary policy, the central bank helps ensure steady and balanced growth. The balance of payment (BOP) show a country's financial dealing with other country, like trade and investment. If the POP is unstable, such as during a deficit, the currency can lose value, which hurts investors' confidence. The central bank can adjust interest rate to stabilize the POP and attract investors. A higher deficit may lead to borrowing from other countries, increasing debt and risk. The central bank can also help by promoting export and reducing import. Lower interest rate make loans cheaper, encourage investment and helps export become more competitive, improving the BOP.
The overnight policy rate OPR is a key monetary policy instrument set by Bank Negara Malaysia (BNM). It refers to the general interest rate that banks charge each other when borrowing funds overnight in the interbank market. This rate indirectly impacts the cost of funds for banks and their lending rate. The OPR has several significant effects. Firstly, it helps in stimulating economic growth by making borrowing cheaper or more expensive, depending on the economic need. Secondly, it increases loan accessibility, especially for businesses and consumers. Third, it influences mortgage rate, affecting home loan affordability. The OPR also impacts bank lending and borrowing costs, which influence overall financial stability. Additionally, it has an indirect impact on the economy by controlling inflation and encouraging investment. Finally, the OPR serves as a prime benchmark rate for various financial products. In summary, the OPR plays a critical role in Malaysia's economy, balancing growth, inflation, and financial stability. The overnight policy rate (OPR) is an important tool in Malaysia's monetary policy. It affects deposit rate, loan interest rate, foreign exchange rate, and home loan. Bank Negara Malaysia set the OPR and review it every 2 months. For example, on July 6, 2022, the OPR was raised to 2.25%. This change impacts loan interest rate, making borrowing cheaper or more expensive. The OPR also help banks manage their cash flow and control the money supply in the economy. In short, the OPR help the company to keep stable by managing borrowing costs and inflation. The Statutory Reserve Requirement (SRR) is a tool used to manage liquidity in the banking system. Banks must maintain reserve in their statutory reserve account (SRA) based on the certain percentage on their eligible liabilities if there an excess build-up of liquidity. The SRR can be raised to prevent financial imbalance and safeguard stability. On the other hand, the SRR may be lowered to support the transmission of monetary policy rate to retail rate, helping adjust borrowing costs in the economy. Right, now I want to explain about the impact Statutory Reserve Requirement (SRR) on money supply. When the SRR goes up, banks must hold more money in reserve, so they have less to lend. This can reduce the money supply and limit credit, meaning fewer loans for businesses and consumers. The SRR help control the amount of money in the economy and also can raise interest rate because less money available for borrowing make loan more expensive. By adjusting the SRR, Bank Negara Malaysia also can help manage inflation and keep the economy stable. But a higher SRR can hurt bank profits since banks earn less from lending. In short, SRR is a tool used to balance the economy by controlling money supply, inflation, and growth.
Open Market Operation, or OMO, is a tool used by Bank Negara Malaysia to manage the money supply and stabilize short-term interest rates. BNM does this by buying or selling financial instruments like government bonds. When BNM buys these bonds, it injects money into the economy, increasing liquidity. When it sells, it absorbs excess money to control inflation. OMO is important because it ensures stable interest rates, controls inflation, and keeps the economy running smoothly. Tools like direct borrowings, repurchase agreements, and monetary notes are used to achieve this. In short, OMO helps maintain monetary stability in Malaysia.
Hey everyone! Ever wondered how Bank Negara Malaysia or BNM controls our economy? Let's dive in. BNM uses expansionary and contractionary policies to manage money supply effectively. Expansionary policy increases money supply to boost the economy. Contractionary policy reduces money supply to control inflation. Tools include the overnight policy rate, OPR, open market operations, OMO, and the statutory reserve requirement, SRR. Lowering the OPR makes borrowing cheaper, boosting spending and investment. BNM buys government bonds to inject money into the economy. Lowering the SRR allows banks to lend more, stimulating growth. These tools help BNM keep the economy stable and growing.
We move to real-world example of BNM policy policy decisions. The first one is decrease the overnight policy rate (OPR) during the COVID-19 crisis in 2020. The Monetary Policy Committee (MPC) cut the OPR from 3% to 1.75%. The second one is increase the overnight policy rate (OPR) in November 2020. The MPC has raised the OPR rate by 25 basis points (BPS) to 2.75%. And the third one is maintain the OPR in 2024. The MPC decided to maintain the OPR at 3%.
Today I'm diving into how Bank Negara Malaysia's monetary policy shapes our economy. Let's break it down. First up, controlling inflation. Inflation is basically when prices of goods and services go up over time. Too much of it can erode our purchasing power. To keep this in check, BNM uses tools like interest rates and reserve requirements. By tweaking these, they can influence how much money is circulating in the economy, cooling down or heating up spending as needed. Next, supporting economic growth. Now, growth is all about producing more, creating jobs, and improving our overall standard of living. During tough times, like a recession, BNM might lower interest rates to make borrowing cheaper. This encourages businesses to invest and consumers to spend, helping to kickstart the economy. Finally, ensuring financial market stability. A stable financial market means that banks and other financial institutions are operating smoothly. BNM monitors and regulates these entities to prevent risky behaviors that could lead to crises. This builds confidence, making sure that your savings, investments, and loans are safe and sound. In a nutshell, BNM's monetary policy is like the steady hand on the wheel, steering our economy through both calm and stormy waters. By controlling inflation, supporting growth, and ensuring stability, they help keep Malaysia's economy on the right track.
So, why is BNM important? Without BNM, Malaysia's economy could face instability such as rapid inflation, weak currency, or financial system failures. BNM plays a vital role in keeping our economy strong, secure, and resilient. That's all for our groups. Thanks.